Hi, I'm Mary Cres. Together with Kayn and Pia, we will discuss our paper entitled Economic Value Added, Market Value Added and Traditional Accounting Measures on Shareholders' Value of Publicly Listed Commercial Banks in the Philippines.
The Philippine banking sector was selected as the focus of the study because publicly listed commercial banks operate in a dynamic environment where shareholder value is influenced by financial performance and capital efficiency. Given the sector's use of both traditional and value-based measures, it is important to examine how these indicators reflect real value creation. In recent years, banks have faced economic shifts and regulatory changes that may have affected their financial performance and ability to generate shareholder value. This study therefore aimed to analyze these measures to better understand how banks create or lose value in a changing financial landscape.
This study is significant because it focuses on how financial valuation methods, particularly economic value added, EVA, and market value added, MVA, along with traditional accounting measures such as ROA, RO, and EPS, affect shareholder value in publicly listed commercial banks in the Philippines. It is significant on stockholders, financial institutions, and investors. Stockholders provides a clear perspective on how banks create shareholder value using EVA, MVA, and traditional performance measures. Financial institutions serves as a guide in evaluating how financial strategies, capital structure, and operational performance affect shareholder wealth. Investors helps them make informed investment decisions by understanding how EVA, MVA, ROA, RO, and EPS influence shareholder value. Results of the study. Economic value added. Across 2015 to 2024, the EVA values of publicly listed financial institutions show wide fluctuations, with increasingly negative means and rising volatility in recent years. The line graph reflects these variations, with several banks experiencing sharp spikes in 2020 followed by declines as capital costs increased and operating returns weakened. Major institutions such as BDO, Metrobank, and BPI display significant swings tied to changing market conditions, operational performance, and cost of capital pressures, while smaller banks like City State Savings Bank show persistent difficulty maintaining positive EVA. Many institutions shifted from strong value creation in 2020 to negative EVA by 2022 to 2024, indicating sector-wide challenges related to interest rate shifts, tightening margins, and increased capital charges. These patterns align with EVA theory, which emphasizes that true value creation depends not only on profitability but also on efficient capital use, cost of capital, and overall risk exposure. Market value added. From 2015 to 2024, MVA values among publicly listed financial institutions widened significantly, with increasingly negative minimums, soaring maximums, and rising standard deviations indicating growing disparities in shareholder value creation. The line graph shows that while many banks follow moderate trends, major institutions such as BPI, Metrobank, Security Bank, and BDO exhibit sharp spikes that drive overall sector movements. BPI records the most dramatic surge in MVA beginning in 2020, reflecting strong investor confidence and substantial increases in market valuation, while Metrobank and Security Bank show notable recoveries after pandemic-related declines. BDO maintains a consistently upward trajectory, demonstrating robust market value creation supported by its dominant position and resilient performance. These patterns align with MVA theory, which links value creation to market perception, capital efficiency, external conditions, and effective management strategies.
Earnings per share. From 2015 to 2024, EPS values among publicly listed financial institutions show a clear upward trend, with increasing maximums, rising means, and widening variability, indicating improving but uneven profitability across banks. Several major institutions, such as AUB, BPI, Metrobank, Security Bank, BDO, and Union Bank, exhibit strong EPS surges driven by improved asset quality, strategic expansions, and post-pandemic earnings recovery. BDO shows the most consistently strong growth, while banks like PNB and RCBC display more volatile patterns due to restructuring activities and accounting adjustments. Smaller and more stable institutions maintain moderate year-to-year EPS movements, reflecting conservative operations and steady profitability. These trends align with EPS theory, which emphasizes earnings per share as a key profitability measure but one that must be interpreted alongside factors like dilution, dividends, and accounting adjustments.
Return on assets. From 2015 to 2024, ROA values among publicly listed financial institutions remain generally modest and stable, with narrow ranges and small standard deviations reflecting limited dispersion in asset-based profitability. The graph shows mostly clustered movements across banks, though a few institutions such as AUB, City State Savings Bank, and PBB exhibit more noticeable fluctuations. AUB shows an upward trend with dips during pandemic years. City State Savings Bank experiences the most volatility, including periods of negative ROA, and PBB demonstrates steady but mild improvements over time. Most other banks maintain consistent ROA levels, indicating stable asset utilization, disciplined risk management, and predictable earnings behavior across the sector. These patterns support ROA theory, highlighting its usefulness in evaluating operational efficiency while emphasizing the need to interpret results alongside factors like asset quality, capital structure differences, and managerial decisions.
Return on equity. From 2015 to 2024, ROA among publicly listed financial institutions shows steady improvement, with rising maximum values, increasing mean ROA, and generally low variation indicating stable equity-based profitability. The graph reflects largely consistent ROA patterns across most banks, though a few institutions, such as AUB, City State Savings Bank, and PNB, display more noticeable shifts. AUB shows a continuous upward trend. City State experiences the most volatility with a sharp pandemic-era decline followed by recovery, and PNB records mild fluctuations linked to restructuring and earnings challenges. Most other banks maintain predictable ROA levels, reflecting disciplined equity management, strong capital positions, and mature operating structures. These patterns align with ROA theory, emphasizing effective equity utilization while also highlighting how leverage, accounting adjustments, and risk management can influence year-to-year performance.
Effect of economic value to shareholders' value. Effect of market value to shareholders' value.
Effect of traditional accounting measures to shareholders' value. Recommendation. 1. The study recommends that publicly listed commercial banks regularly monitor fluctuations in shareholder returns and cost of equity to maintain stable shareholder value and minimize volatility across periods.
2. The study recommends that banks should strengthen strategies that enhance economic value added by improving profit-generating activities, managing financing costs, and optimizing invested capital to ensure sustained value creation. 3. The study recommends that banks are encouraged to closely track market value-added trends and adopt measures that improve investor confidence, market perception, and overall market valuation to support long-term shareholder value.
4. The study recommends that banks enhance their operational efficiency and profitability frameworks since fluctuations in ROA, and EPS reflect the need for more stable and consistent financial performance.
5. The study recommends that banks should prioritize initiatives that increase economic value added, as EVA has demonstrated a significant influence on shareholder value, ensuring returns exceed the cost of capital. 6. The study recommends that banks are advised to improve transparency, investor relations, and market positioning to strengthen market-driven value creation, given the strong effect of market value added on shareholder value.
7. The study recommends that banks should incorporate broader value-based performance metrics that capture true economic gains, since traditional accounting measures such as ROA, and EPS were not significant predictors of shareholder value.
8. For future research, a related study may explore other determinants of shareholder value, such as governance quality, firm characteristics, or industry-specific variables, to increase explanatory power.